Crypto Hotep here with another trading video. Before we begin, this video is brought to you by the good folks at Coinbase. If you are unfamiliar, I use Coinbase for all of my spot trades. I've been using them for over 4 years, and I trust them with my crypto, but I also move my crypto off into cold storage wallets, but all of my spot trades for crypto is in Coinbase. Feel free to support the channel by using the link below in the description to link your Coinbase account if you have one, or sign up for one if you don't. Basically, if you do that, a portion of those fees that are charged to you when you trade on Coinbase will be sent to me as well. So you literally don't have to give me any money at all and continue to do what you do buying crypto on Coinbase. With that out of the way, what we will be going through today is we're going to do some charting with the Ethereum name service, or the ticker symbol ENS, and just talk about the crypto market in general. One last thing, anything that's said here is not financial advice at all. Please, DYOR, do your own research on any crypto, any coins that you want to invest or trade in. But these videos are for my own edification. I just want to ensure that I'm following my process, my strategy, and my plan every time that I look to invest or trade a crypto. With that being said, let's jump right in here. So ENS, Ethereum name service, if you're unfamiliar, is the token that powers ENS. And what the Ethereum name service is if you've seen, especially on social media with Twitter, those .eth names. I also have a .eth name, and it's actually a pretty good service because that .eth domain ties in all data points related to that specific thing. So for instance, one person can have a .eth name, and that has the Twitter profile, email, multiple other domain or .eth names, everything under one house for easily transmittable information. It's actually a pretty good service, and it was peaked, or it did peak up, I would say maybe 2 years ago or so, where in real life companies we're registering their .eth names, so they weren't being outbid for them, because at some point a lot of those .eth ENS names were really something of a value. People were betting 1, 2, 3 ETH for certain names. It was really pretty wild. So I'm not saying that hasn't tapered off, but you don't really hear about that a lot now. It is still around. Ethereum name service is still around. It ain't going anywhere. I still have my .eth names, but it also is a coin that we can trade. So that's why we're here. So first things first, we do trade on the weekly time frames. So you'll see that we are on the weekly time frames. A couple things on the screen itself. We have Heikin-Ashi candles as always. So those Heikin-Ashi candles smooth out price action. If you want to see the difference between Heikin-Ashi and regular candlesticks, we can click here in this upper left corner. You can see these are your regular candlesticks here, and then these are your Heikin-Ashi candlesticks. You can easily spot trends a little bit easier. And in terms of spotting support and resistance levels, they work really, really good. And that's why I use them. I also trade on them as well. In the top half of this screen here, you also see the RSI indicator, relative strength index. If you're unfamiliar with relative strength index, basically it tells when a certain asset is quote unquote oversold or overbought, and potentially you would do the opposite, which would be to sell when it's overbought or buy when it's oversold. So what I did was I customized my RSI with a red line for the oversold, and then or for the overbought, I should say, and then a green line for the oversold, right? And then you also have a middle line or a 50 line on the RSI as well. So anything above 70 for me, I'm looking at a potential overbought level here, and anything at around 30 for me, I'm looking at a oversold level for RSI. Those are my conditions here for my RSI. This purple line is the 50 EMA. I also use a 200 EMA if those data points are there, but because ENS came out around 2021 or so, you only have about 3 years of historical price data, so we don't have a 200 EMA for that. So when I'm looking at these charts here, the biggest thing I do is when I'm on my weekly chart, I scroll into the weekly chart until it looks something like this. Okay? Till it looks something like this, because I can see, it helps me look and see even better than just looking at regular Heikin-Ashi candlesticks on where certain pivot points and high support and resistance levels are. So if I'm using my rectangle tool to draw out my support and resistance levels, I would be looking at this level here, because you can see a strong move up from this level. I would also be looking at this level here, because you can see a strong resistance at this level right here. Oops. Okay, and I'll adjust these. I'd also be looking at this. This is support right here, and I can draw this out. And you kind of see here, we have support here, really didn't do anything at these points, and then price came back to this level and this support. This level right here, this level right here as resistance, this level right here as support, and then somewhere around this level right here for resistance again. Sometimes I won't draw this many levels, but just to keep myself honest, and for the video I will do so. Okay, and then what I do is I scroll the chart back out, and then this is when I'll be doing some adjusting and color coding. So I do color code these levels. Purple means that it was a flip level. A flip level means that it acted as both support and resistance. Okay, if the level is blue, that means it hasn't been broken yet, meaning that it hasn't acted as support or resistance, and that level is, or I should say support and resistance, it hasn't acted as both. It's only acted as one because it hasn't been broken. So here, this hasn't been broken or tested. This here, this has been broken. So I'm going to push this up just a little bit here. So this is a flip level because it has been broken. This is support, bounced off, and then it broke through here. Okay, this has not been broken yet. This has been resistance. Okay, so we will make that blue. This here has been resistance, support. So we can keep that the same. I'm just going to draw this out just a little bit here. This one has also been support, resistance, support. So this is good here. This one, we have resistance here, and then it broke through, and then also support right here. So what I typically do is I will just bring this out just a little bit here. Okay, just like that. And then this is support. You have support here, here, and here. Price has not or has yet to break through. So this is a strong level here. So, and then I will scroll out just a little bit here, and I'll look for certain patterns for price action, certain double tops, double bottoms, rising wedge, a downtrend that's to be broken, something along those lines here. And then I'll also, if I have to adjust these points just a little bit, I'll adjust them. And so if I'm looking at ENS here, a couple of things come to mind. We have two resistance levels right here. This is a strong resistance level. Okay. Another thing is price has broken down below this key level here. Okay. And another thing that I like to mark out are, I call them liquidity grab areas or liquidity sweeps. So basically an area with a long wick down, I like to mark down here. So the first, I'll look to my right first and see what area do I like, or what area sticks out to me here. So this sticks out to me because of this long wick and then a big rejection from this long wick. Now, if I look left, what's funny is I also see this level here, which is very, very close to this wick level right here. So what I would do is I would mark this level out as a liquidity move here. And then I would also mark this level out right here. I don't like to have too many close by each other. Let's see. And then I'll mark this one out here. And usually I only mark like one or two that are near price, because I do want to see where price is going. So, or where price could go, I should say. And typically these liquidity levels are near key levels, right? So I'll repeat that. They're near support and resistance levels. As you can see, we have a level here. You can see this tapped on this liquidity right here, big move up. Right here, you can see this came very close to coming into this liquidity level, price moved up, and then came down here. You can see price coming back down in this area, potentially for maybe a move down, a quick move down for a move up here. That's what I'm potentially thinking, only because we've seen a big rejection here. So we've seen a big rejection at this key level just because of these long wicks at this level. And price right now is trending lower. So price is really low, is really near to this low of, I believe that is, let's see, that looks like that's 1512. So price is pretty low to 1512. Price could drop down to grab this liquidity here sitting, as well as this one here, because they're so close by. And we're still in a key level, so that could be the trampoline that's needed to push price back up. Another thing that I do is I do mark the highs as well. So usually highs that are marked out, I will mark this high out as a potential target, and then I'll mark this high out as well. And it looks like that's probably the only high of the year for 2024. I'll usually designate them on 2024 yearly highs, or that yearly highs, and then I'll do the month in that year. So this one is 2024's yearly high. This one would be August 2024 high. And you could make a case this would be a high right here in September. This is so close to August, I'm gonna just not highlight that. These 2 points here, the 2024 yearly high and the August 2024 high, those will be my targets. Those would definitely be my targets here that I would be looking at. So my thought is, currently with ENS, we are also trending below the 50, okay? Below the 50 on the RSI as well. So we have the RSI here. We are below the 50 in the RSI. One of my trading and kind of investing principles are anything below the 50 RSI trending down towards the 30 is a good buying position, as long as price is in a key level. Currently, price right now is not in a key level of mine. Okay, this is my key level that I'm looking at currently, and it is not, price is not in there yet. If it drops down and gets in here, to me that would be a decent enough buy, even if RSI was down here, Because what would happen is sometimes price will do this and then come up only to come back down here, grab the liquidity, come back up, break, retest, and then come up here. Okay, so what price will do, price typically plays around here. If price sees some liquidity sitting here from many months ago, it'll come back down, grab that liquidity, push price back up, break again, re-break the key level, come back on the retest, and then push price up. When it does this, RSI will come back down. Typically will come back down here where it's in maybe an oversold level, which is another perfect buying condition. And then that would constitute for a buy. And then you can hold that past the 50 and up into that oversold or overbought area, I should say. So that's usually my rule. If it's below 50 and it's near a key level or at a key level, that constitutes a buy. If it's above 50, my buys, I would not do a buy if it's an above 50. What I would do is this. If price, let's look at the November time frame here, November 2023. So if price is here, for instance, price was at $7.50. If you align $7.50 to the RSI, that constitutes a buying position. Price is at this level. It shows bullish pressure coming in with this candle here. So that would constitute a buy in my book. And you could buy all the way up until 50 RSI, I would say. And so you would buy up until 50 RSI, and then you would potentially hold because there would be no reason for you to sell based on these Heikin-Ashi candlesticks. So basically, when you're looking to sell, you're looking then for bearish selling pressure because of your position. So you bought here at the bottom. You're looking for a bearish doji, something like this candle, but I still wouldn't sell because if you look at the RSI, all you're doing is you're retesting the 50 RSI. So now, if you didn't sell right there, which I still wouldn't sell because you're in between these key levels also, now you get a bullish candle, another bullish candle, and then you get kind of a God candle here where now you're in overbought levels on your RSI. You're also at a key level for resistance. So potentially that would constitute a sell. Now, if I did sell, what I would do is if I sold here at this, that would be a valid sell, totally worth it. I mean, let's see what your risk to reward would be. I mean, let's say for instance, you didn't sell right at the top. Let's be realistic and say, for instance, you sold at the next key level. That's over 150% gain, which is not a bad trade at all. So say, for instance, you sold at that level and you say, hey, price is a little bit too high for me right now. I really don't want to buy it at this level. That's warranted because your RSI is still in overbought status. It's broken the roof. So that's fine. Keep in mind, though, you still haven't retested your 50 RSI. Typically what happens with price is when price action does this and it breaks through the RSI and it comes back down, you can retest this 50, and usually there's what we call a dead cat bounce, meaning that you'll get somewhat of bullish price action from the 50, but it's not gonna go, typically it won't go and break through the RSI 70 like it did before. So you're not going to get the same explosive move here, but you're still going to get some sort of bullish pressure here. So what I would do is I would sell here, and then I would wait, and I would wait for price to come back down into this area and then to show any type of buying pressure. So how would you see that? Well, the Heikin-Ashi candlesticks make it a little bit easy. So the first thing is when you sell, Now you're looking for bearish candles. You have one bearish candle here. You have kind of an indecisive doji here. You have another bearish candle, and then boom, you have this big sell-off right here. So you have a big sell-off here, and then that's when price breaches that 50 RSI, okay? And now you have another bearish candle. This bearish candle has no wicks on the top, so there's strong selling pressure here. Even though there's strong selling pressure here, the wick does not come lower than the prior candle's wick. Something to keep in mind here. And then the next following candle has a wick or a shadow at the top and bottom, and so does the next. And then you can see very slight selling pressure. This does not work all the time, but again, you're below the 50 RSI somewhat. Price is in your key level. Price has yet to bounce off that 50 from blasting through your overbought areas. So this would be another buy for me. I would buy here, and here you have another bounce up into this key resistance level. So you would buy here, and let's see what that trade would be like. This would constitute a buy. And so if you sold again, if you targeted that key level, you're looking at an above 50% trade, about 79% trade. That's still not a bad trade here. And then you would sell off again, right? So again, but you have to remember though, now you're not going to get the indicator telling you when to sell. You're more than likely going to have to target another key resistance level and then sell from there. And so you would sell from there. You can obviously see the buying pressure is getting fewer and fewer here. And so you would sell in this area. This would be a good area to sell right here. And then now you're waiting. Price comes back down. More than likely price is going to be below the 50 now, because typically once you have one bounce from the 50 and it does the dead cat bounce here, usually price will be going a little bit lower on the 50, as you can see, or staying below the 50, as you can see it is right now. Now, one other thing here is sometimes I will draw support levels on your RSI, because you can see this right here. That's clear as day. You have support right there on your RSI near, I believe that looks like 44, very close to 50. So support hasn't broken on the RSI right here at this level. It's still hanging around here. So just something to view. Would I buy ENS right here? I probably wouldn't. I probably would stay to my rules and wait for price to get into this key level, and also to show buying pressure first. That's the biggest thing. I have to see something like this here, something like a doji candle, and let's kind of zoom in so you can see what I'm saying here. So something along the lines of, if you have a big sell-off, something like this, if you have from big green candles, mine are white, but from big green candles to red candles, mine are black, for selling, you have to see some sort of buying pressure, which you would see here. So you have a doji, and then immediately following the doji, you have a bullish candle here. I would buy that. Plus, you're at a oversold level here. That's a valid buy. And maybe not put everything into it, because again, price could go down. But then if I see this, another sell, right? Bearish candle, no wick, bearish candle, no wick. Oh, here we go, bullish candle. Then I would put some more right there. That would be legitimate buys right here. So you have to see buying pressure before you just get into a trade. I'd buy on this candle. Again, buying pressure, price in the key level, below the 50 as well, as I mentioned. So that would be a valid buy too, right? So you're looking for price to be somewhat near these levels. This price here, it just seems like it's a little bit too far away for me with my key level. So I'd want to see it a little bit further down here before I make any type of trades or investment into this. But very similarly here, like I I don't even know if being honest, I don't even know based on my rules if I would even buy in this. I know what I said, but if I'm playing to my rules, this looks fine, and I probably would have rolled the dice here. But I wouldn't have rolled the dice that much just because it doesn't have a lot of confluence. It doesn't have as much confluence as this. Price is sitting, literally sitting in here. I see the bullish move, and I see that bullish candle. I really don't see that here. I mean, it's a doji, but it still doesn't say too much for me. And even so, after that, you have two bearish candles right there. So this is right now, price is sitting in no man's land. I call that no man's land for ENS for me. So I really wouldn't do anything right now. But as always, guys, this video went a little bit longer than expected. But that's what my trading process is typically when I'm looking at charts. I'm drawing out key levels, making sure I'm on the weekly chart, looking at my RSI as well, and then drawing out liquidity levels or levels that I think price could be drawn to in conjunction with your key levels. Okay. I'm also marking the highs. I'm looking for patterns such as double tops, double bottoms, or something like this, which is called an inverted head and shoulders, right? So this is your shoulders and this is your head here. And typically that's a bullish pattern. Or you could have a double bottom, which is something like this pattern right here. Double bottoms you can really see on Heikinashi. But I am also, when I'm looking at these charts, I'm also looking for, if I'm interested in getting into the trade, I'm looking for buyers to get into the price action. Why? Because I'm more of a one-sided trader. I do a lot of spot buying. So I'm looking for buyers to get in there so I can see, okay, the tide is turned if there's a big downtrend. Okay. But as always, guys, thanks for hopping on here. And if these videos are helpful for you at all, feel free to like, subscribe, comment. Let me know what you think. Let me know what you want to see. And as always, thank you and happy trading.